those of you who don't know, Victor is the operator of the Fishkill real estate networking event, where he gets together with other investors. He'll put together someone like myself to give the education aspect so that he can bring as much value to the investors as possible. So for those of you, most of you, I'm sure already from his group, as that's how you got to this webinar. But if this is your first time, you definitely want to go on meetup.com and check out the Fishkill real estate event, and make sure to follow them for future webinars such as this one and other networking events. Today, the goal is to talk about financing using hard money. So whether you're investing in fix and flips, buy and holds, there are many different reasons why an investor would want to use hard money, and we'll go through that now. So I'm going to go ahead and share my screen. Give me one moment. This. Perfect. Okay, so we're going to go through the hard money guide for real estate investors, and kind of talk to you guys a little bit more about the process, how it works, what you need to know when you are looking at your next hard money deal. So first things first, I'd like to just make sure that everyone's on the same page. We are not attorneys, we are not accountants, we are not CPAs, and you should, anything that's legal, talk to your attorneys. Anything that's regarding to taxes, talk to your accountants. This is not to be used as legal information, but more just to give you our opinion and what we see going on in the market. Okay? So the few things that we're going to cover today is what is hard money, why use it, how it works, what typical rate and terms look like, what lenders usually want to see from borrowers, and what we look for when underwriting files, how to shop for the best hard money lender, and how to calculate a hard money deal to understand what your profits look like. So why does hard money exist? And the answer to that is because there was a big gap in the market in 2008 and 2009 when we had a big crash. And that gap was that there were a lot of properties similar to like what we see today that were not necessarily, they weren't taken care of, they weren't in the best shape, and a bank couldn't finance them based on the current structure and the current state of what it was in. And people were looking and seeing these deals and saying, well, hey, I can make a lot of money on them. How do I do that? And that's how hard money lenders came about. They saw the gap in the market and they came to fill it. Now, why is that important? Why am I mentioning that? Well, for those of you who feel like we may be coming around to a crash or a correction of any sort, this would be the ideal market to be using hard money. This is what the market that it was created for. Now, what changed? Lenders honestly just saw that there was an opportunity there. There were deals that were happening that nobody was financing, and that's how we all came about. Now, what is a hard money lender? A lot of people, they see the word hard money and they think, uh-oh, I better stay away. And on the contrary, it's really not like that. The only reason why it's called hard money is because there's a hard asset that it is attached to, right? So it's an asset-based financing, and it's typically used by investors for short-term projects. So a hard money deal is not a deal that you would want to do for something that you plan on holding for 30 years or longer. This is something that you want to do either for a fix and flip or for a property that you are changing the use or changing the way it is today so that you could refinance it later at tomorrow's values. Now, why would someone want to use a hard money loan? Why is it beneficial? What does it help with? So the answer there really is it's good for the people that number one are not liquid enough to go out there and buy millions of dollars worth of real estate cash. I don't know many people like that. Another thing is it's for investors that play the numbers game, right? They want to get as many properties as possible. They want to own as much real estate so that they can work with this and increase their cash on cash value, and not so much caring about the actual ROI of the asset. It's more about the cash on cash value and what I can make back on my money. Third reason is leverage. You're also going to get much higher leverages, especially if your strategy is, let's say, the BRRRR strategy, which is buy, rehab, rent, refinance, repeat. In those case scenarios, you're going to get a higher leverage than you would if you typically purchased a conventional, and when you refinance, you'll have less money in the deal. And then number 4 is you're working with lenders who understand your game. Now, why is that important? When you're working with a bank is not in the real estate business. A bank is in the loan business. They want to get your car loan, your credit cards, your personal loan, your primary home, maybe an investment property. They want a little bit of everything. Now, when you're working with real estate lenders, hard money lenders specifically, we are usually real estate investors that have come from that field, that understand it and are solely focused on real estate, where we could help you understand your deal and bring you information that'll help your deal. And obviously strategy. Strategy is always the big thing, especially when we're looking to make profits. Now, the top 3 reasons why to borrow hard money for your investment. Normally, number 1 is timing. Timing is super important, especially when you're trying to buy a property for 20% below market value, because you told them that you're going to close in 2 weeks. Well, you have to come through with those 2 weeks. And if you go conventional, you're not closing less than 30 days. And that's if you have a bank that's actually going to get it done in 30 days, right? So timing is a major aspect here. And hard money lenders like ourselves, we have the ability to close deals out in 2 weeks. Repeat borrowers, we could close even quicker. And something that I'm actually really excited to share with everybody today is that we actually just started up a new process for our appraisals, which are going to cut our processing time in half. So now everything is getting done desktop. So we could get those back in 3 to 5 days, and we could technically underwrite. Our fastest deal we've ever closed was about 3 days. For repeat borrowers, we estimate a week. For brand new borrowers, that would take 2 weeks. So timing is definitely important. Approval criteria. When you work with a hard money lender, we don't have the same approval criteria as you would if you went to a bank to get your conventional financing. Why? Because number 1, we don't want to see your W-2s or tax returns or anything like that, because that has nothing to do with this deal. We are funding you the money to get this deal completed. And if we feel that you have the capacity to complete the job, well, guess what? That's your income, and that's where you're going to make the profits out of, and that's where you're going to pay the payments out of. So as long as the deal makes sense, there's a lot of the approval criteria is also cut in half. Flexibility, you don't have as much flexibility when you take a 30-year term that may have prepayment penalties on it, or what happens if you're mid-construction and you need more time than you expected. Hard money gives you the flexibility to either A, pay off the loan early without any prepayment penalties, or B, you can get an extension to keep your project going so that you don't have to take a loss. Now, how does hard money financing work? Number 1 is time is of the essence always. We always have to make sure that we're closing quickly, so it's important that we have everything together. So that's number 1 is I would always recommend speaking with myself or your lender beforehand, giving them some information, tell them about what you're trying to do, tell them about the deals that you might be looking at. If you've invested before, share some of those information, because that'll shed more light on what you might come up to next. No 2 deals are ever the same, so it's really important to kind of understand it more than just say, hey, what could I plug into where? We also specialize in our underwriting process and closing quickly. There are a lot of things that have to go into underwriting to make sure that everything fits and everything can happen in the right time frame. So we have pretty much come up with systems and structures to make sure that we can accomplish all those timelines and not have any hindrances throughout the entire process. Now, the underwriting process can take a day or 2, and closing can happen as little as a week. You find a deal today, it literally can get funded by next week. Where does the money come from? We do all the hard work for you guys. So we're private money lenders. That means that all that money is private. It comes from family, myself, cousins, relatives, and so on and so forth. And we go out there and we put that money out into your pocket so you can get more deals done and ultimately increase your portfolio to increase your ROI. Now, responsibilities of the hard money lender is to underwrite the deal and service the loan. Now, underwriting is more of a communication process to make sure that the borrower also understands, hey, especially this comes into play a lot of times with new borrowers, right? It comes into explaining the process, not just of underwriting of the deal, but of the actual deal. Because if we can understand it, and that's really what it is, it's us making sure that your plan makes sense. Screening the borrowers, we're going to do a background check pretty much just to make sure that there's no skeletons in the closet that we should know about. Evaluating properties, we have to make sure that these values that we're expecting, right? So sometimes a borrower will have a certain value. Let's just say I had one borrower, they had a 300,000 ARV that they were expecting. And after further looking at the deal, we realized that there was a warehouse opening up across the street. And we told them, like, hey, that's probably going to affect your ARV. Meaning you might get it on the appraisal that the ARV is going to come back at 300,000. But what happens if you can't sell it for that 300,000? What happens to your profits? And long story short, he actually decided to back out the deal because he didn't think the risk was worth the reward in that scenario. But it's important for us to be able to look at this and give you that information so that you can make those educated decisions and decide if the deal is for you or not. We're also in charge of dispersing funds, meaning the draws to get the construction done, right? And that's super important. A lot of the times I talk with borrowers who want to leave their lender because they can't get their draws out on time. And what people don't realize is they took let's say a 1% savings and went to another lender, and now they're having trouble getting their funds dispersed, and now they're in the deal an extra month or even two. And at the end of the day, that 1% savings didn't really mean much to them because they paid more in interest now because they were forced to stay in the deal longer. So it's not always about the dollar for dollar. You have to look at the full scope. Hey, what does your draw process look like? Ask those questions. Make sure you know that before you get involved, because then comes your first draw. You have to know, how am I getting this? Do I have to complete the work? Does it come to me beforehand? Does it come to me afterhand? It's important to know that. And again, every lender is going to be a little bit different. So make sure you ask and understand that. And then we're also in charge of collecting the monthly payments, which is usually done through ACH to make your guys' life easier. And a lot of people also will do what's called interest reserves, where they'll pay a certain amount of interest up front. They'll have it come out automatically every month from their account, and whatever's left over comes back to them. So there's many different ways that you could go about that as well. Making sure that capital is deployed and where it goes. So for here, it's talking more about where we put it towards. So here we do purchases, renovation funds. We'll also do refinances. If you have a project that maybe didn't need work, a couple of years ago, you had some tenants and now you have a great opportunity, the market raised, and now you want to do some work to increase your values because you could get higher rents. These are all perfect viable scenarios that we work with. Draws, cash to complete the renovations, and the interest-only payments to keep payments low. Why is that important? Because if you're paying principal also, your payments would be higher, which makes it harder to keep in the deal for the 12 months. So everything is built here for the short term to make the deal make the most sense, to give you the flexibility to get it done and in and out as fast as possible. So now let's talk some LTVs, because I know this is a question that a lot of people have when it comes to financing. So many home buyers today are required to put down 10% for a home with a hard money lender. So for example, a $100,000 home, the buyer would need to bring $10,000 as down payment and want to get a $90,000 loan. Now, one thing I want to one bit of information that I think is super helpful, it helped me out a lot, is understanding that loan to value is a very vague terminology, right? And why do I say vague? It's very specific by the equation, but it's vague by the sense of what value are we talking about? Are we talking about the as-is value? Are we talking about the after-repair value? Are we talking about the purchase price? So LTVs work for all of them. Differentiating that and being clear in your communication is important. So, for example, we talk LTV in this case scenarios off the purchase price. Then there's going to be another LTV that we're going to talk about shortly, which is called AR LTV, which is your after-repair loan-to-value. So I'll show you that right now. So here, you'll see right here. So lenders take LTV of the ARV, not only the LTV, and we're looking at the purchase, the rehab, and the ARV. Those are the three most important numbers to help us understand your deal and show you profitabilities and everything else. The next thing that we're considering is the location and the experience of the borrower. Hold on one second. I think this missed a page. I wanted to. Where'd it go? Okay. I'm going to just focus on this a little bit more than I think I lost one page, but I'm going to focus on this a little bit. So when we talked about here, you know what? This will actually be very helpful for you guys. So when we're talking about LTVs, there are multiple, I'm going to call them columns, and the goal is to make sure that all of them fit. If one of them doesn't fit, they all have to be reduced so that that last one does. So I'll show you what I mean right now. So let's take a deal. Let's just say we're buying it for $100,000, and the ARV is $250, and we're going to put $50,000 worth of work into it. And we're going to borrow at, let's say 90 and 100. Let's just set this up. There's my Zoom. Okay. So right now, let's just say we're buying at 100. We're borrowing 90% of that. So that means that my loan amount is 90,000, and I'm putting down, my down payment is 10,000, and I'm getting 100% of the renovation budget. So my loan amount comes out to 140,000, right? Now, 140,000 compared to our after repair value of 250 is only 56%. So we're at a 56% LTV of your future value. Of our current value, we're at 90% loan to value, right? So as we want to make sure that all of these fit. Now, as a hard money lender, most of them want to be between 65 and 70% of your after repair loan to value. And you're going to get between 80 to 90% leverage on the purchase. Now, are there scenarios where you might qualify for the 90 and 100, but the deal doesn't qualify? Yes, right? So let's just say now the same deal needed 100 and 100, 100 purchase and 100 renovation. Now we're at 76% loan to value. Now you might see us have to lower our LTV to make it work. What happened? Oh. And then you would see us do something like this to keep now the 70% of the loan to value. And again, I'm going to open up for questions for this as soon as I'm done. So if anyone has anything, just please write it down, put it in the question and answer box or the comments, and I will make sure to get to it. I know there's a lot of information here. But that was pretty much just to kind of show you guys both scenarios of the loan to value and how that works. So now what do we take into consideration when lending on it is such as the loan to value, the ARV, as well as the purchase, the renovation cost, and your after repair value, where it's located. When does this come in? Well, first off, location is real estate #1 rule. But number two is, again, when does this really come into play where we start to look at it is if you're in a suburban place versus a rural place, right? How quickly and how likely is it for the property to sell? Nowadays, there's actually rural is actually really doing well. So we're going to look also at the days on market. So that's just to give you guys a little bit of info on that. And the last thing, and probably the most important, is the experience of the borrower, right? So a hard money lender like myself may allow somebody who has a lot of experience to do something really risky, whereas we may not allow a rookie to do that same deal because, hey, he doesn't have that same experience. He doesn't know what it's going to take to get to the finish line and actually complete it. So experience definitely goes a long way. The more you have of it, the better terms you're going to get and the more types of deals you're able to do. Now let's talk some, rates and understand kind of what you should expect when looking at a hard money deal. The length of the loan, so they're all short term. So with Express Capital Financing, you get 12 months, a 12-month deal. You'll have a free 3-month extension. So that really gives you 15 months. And then you have an additional extension on top of that you could get for 1%. So 15 months, you can pay it off as soon as you like with no prepayment penalties. That means that if you're in the deal for a month, you only paid a month's worth of interest. If you're in the deal for a day, you only pay a day worth of interest, all per DM. Now, we as the lender also want you as the borrower to be in and out as quickly as possible. Our lender and borrower's interests are extremely aligned throughout the entire process of the deal. Interest rates. These do vary based on location, risk, experience, credit, and other factors that can come into play. Now, when working with a lender like myself, also don't forget, if you have something that qualifies you on a different level, bring it up. For example, I know some people that have a lot of businesses that they have very high net worth, and because of that, we're willing to go a little bit higher for them, or maybe do something a little bit differently. So there's a lot of common sense underwriting to it, and a lot of makes sense. So just be transparent. Let us know exactly where you are, what your situation is, and we'll make sure to help you out as much as possible. Interest rates, just so you know, they do range from about 8 to, I would say in our market, about 10, 11%. Unless you're a really hairy file, you probably won't be paying more than that. Origination points, those are kind of deal by deal basis. They do range from, I'd say, about 1 point to 3 points, depending on the deal and the volume that you plan to do. Borrowing, let's talk a little bit more now. So here is the deal calculator, by the way. Very important. This is the same spreadsheet that I was showing you guys over here, but that you can use on your own time from your computer whenever you'd like. So if you go to our website, expresscapitalfinancing.com, and you look on the top in the business resources, you'll see over here a deal calculator, and you could input all the information, your purchase price, your after repair value, how much you plan to borrow. It'll tell you what your after repair loan to value is. You'll tell it how long you plan to flip, interest rate points, taxes. You could add all of that. And this will give you a full breakdown, not just of the lender numbers, but of the whole deal. So it's going to take into account your taxes. It's going to take into account your closing costs, such as a broker fee to sell the property in the future when you're ready to, when it's finished. You're going to have your taxes in there, filing fees, legal, everything's in here. You can customize it. So feel free to use this, make this page your best friend, because it's going to be very helpful when you're looking at deals. And so when you understand that, you can see that, and you can use the deal calculator, it'll also tell you how much money you need to complete the deal, so that you could kind of make sure beforehand, hey, is this a deal that I want to take on? If I need 50 for it, but I'm only planning on spending 30, well, hey, this is probably not a deal for me. So take a look at it, play around with it. If any questions on it, feel free to email us. We're always happy to talk shop and talk through your deal with you. What does a hard money letter consider when funding a property? So we call this the 6 C's. And I probably went over these over the course of this webinar, but I'm going to go into it a little bit deeper. So collateral, which is the property itself. What's it valued at today? What could it be valued at, right? What condition is it in? Number 2 is the condition of the property, which is specifically towards that. Hey, is this a gut renovation? Is this just a light makeup, or is this a firehouse? What's the capacity of the borrower, right? So a lot of the times we have borrowers say, hey, I'm a general contractor. We actually really like to hear that, because that helps us say, wow, this guy has the capacity to complete this job by himself. He's not relying on anybody. So capacity is a really big thing. How likely are you to get this job completed? Number 4 is the capital. Do we have the down payment and funds to complete the job? Character. On this one, there's really not much. Just be a human being, be someone that you want to work with and not somebody that you don't want to work with. And additionally, don't have your voicemail saying, hey, if you're a debt collector, don't leave a message or something along those lines. We don't want to hear that. And then lastly, you have is credit. So we're going to look at credit. We're not credit sensitive, I'll say. Credit does play a factor, but it's not a huge factor. The hard money application, what does that look like? So there are multiple ways to apply. You could I would recommend most people just give us a call and talk to us over the phone. It gives us the chance to really understand the deal at the highest level possible. But you could also log on to our website, expresscapitalfinancing.com. And if you go to the Apply Now section of the page, which is right over here, you could fill out an application for whichever type of deal you're looking for, whether it's a commercial mortgage, fix and flip, or a residential mortgage, and fill out our application, and we'll get in touch with you right away. Now, what information do we need? We're looking mostly for the property information, some basic information on you yourself as well. You don't need your social security number for the actual application, but obviously we will need to do a credit check and background check. We'll need the contract of purchase. We'll need the insurance, that the binder, pretty much that's usually the last thing. That's not part of the application. That's before closing. Renovation budget. This is a big one. We definitely need the renovation budget for multiple reasons. Number one is we have to understand what type of fixes we plan to do to the property, right? Two properties bought at $100,000. One is going to get an ARV of 200. One of them is going to get an ARV of 300 because of the quality of work and what was done to the property. So it's very important that we understand that so we get the best value for you so that we make sure that you're going to be profitable. This also helps with the draw process when you're getting your finance, getting your rehab money to kind of keep everything in order. And also, this keeps your contractor in check and making sure that he's not starting to raise values on you or cost, and you know exactly what was told to you. We'll also need a BPO or CMA, which is pretty much a comparative market analysis. So it's you'll have either your realtor send it, or you'll have a couple of properties maybe that you looked up that you saw to understand what that future value would look like, or the as-is value, depending on the deal you're doing. Additionally, the only other thing that I would say that's not listed here is your entity information. If you don't have an LLC or corporation already created, look into getting one. If you aren't sure kind of, where you might be buying, or there's a couple of things, yes, it could wait till last minute. You don't want to if you don't have to, so try to get it done beforehand. Don't forget, you can always change your operating agreements, and please only do that with your attorney, not just off of what I'm telling you. All right, guys, I'm going to open up for some question and answers. It looks like we got about a few questions in already. Let's see what we got. Okay, never mind. That's not a question. Let's go here. Can you send me some tools to help me calculate the ARV and LTV? So I cannot, there's no tool I can give you really to help you calculate the ARV. That's more of a experience thing that's going to come into play, that overall, after doing it a couple of times, you're going to understand it better. So what I would do is I would recommend that if you don't know how to calculate ARVs, I would recommend that you partner up with a realtor, someone that can really help you understand that. Or I also just spoke with somebody the other day that has a program. It's called Think Like an Appraiser, where he'll go into an entire course to teach you how an appraiser values property so that you can do similar equations for yourself. Now, keep in mind, there are two values in real estate. There's the paper value, which is the appraisals, so to say, and what everything says on paper. And then you have the actual values, which is what you actually sell for, right? Not everybody that gets an appraisal for $100,000 sells for $100,000. Sometimes it's more, sometimes it's less, sometimes it's just that. So that number also means more because that's what your actual profits are going to be based off of. But it's important to understand how appraisers view properties and how they get values so that you can have those same numbers and you can make your deals make sense on paper, which is what everyone's looking for. So I'm seeing here that apparently the reverb was still a big thing. So I hope that was fixed. I hope you guys can hear me better now. If not, hopefully this recording comes in nice and everyone can listen to it again. Johnny is asking, if a property is rural, how far away from the subject property would you go to get comps from? So the rule of thumb is you never really want to exceed 2 miles. A mile is already long. It really depends. When you start to get into unique properties or rural properties, there's no real math to it. There is multiple ways of coming up with the values, whether you have to do maybe you do a closer comp and do adjustments for it, or sometimes you may have to get a further comp with no adjustment. So it kind of depends on the market and where you're at. And if you have a property like that, if you don't know how to value it already, I would either connect with a realtor or potentially try to find something that has stronger comps. This way you don't have to play a guessing game, and you can know what your profits look like. Do we have any other questions? Please, guys, put it in the Q&A box or the chat box. I want to hear your questions and help answer as much as possible. Okay, looks like we got a couple. Do you work with non-U.S. citizens? We work with non-U.S. citizens. The rule is they have to have two things. One is allowed to be here in the United States. And number two is they have to have a credit score. I would rather them have a terrible credit score rather than have a zero. So they have to have like a social security or an ITIN that has a credit score. The next question from Alex also is, what are our starting rates and points? For our hard money programs, we start at 8%. Points start at 1%. We even have a 0-point program where you could pay the points on the back. And for our rental mortgages, we start in the 4.8. And commercial mortgages, we can go, if you have full doc, we can start in the 3s. If we have light doc, we'll start in the 6s. Monette is asking, can we personalize the listed marketing flyer with our direct phone number? Yes, you can. So I'm not sure which flyer in particular you're referring to. But I do have, if you go to my website on the broker referral program. So for anyone who is interested in brokering loans, they can go to the referral and broker program page and they could sign up there. Or if you want to get some flyers or resources, you could go to the resources page and take a look at all of our flyers. We don't honestly keep them as fully updated as we probably should. So just check the information before you finalize it with the website. All of our programs are here. So you can find direct access to everything and apply directly from our site. You'll see what LTVs we have, rates we're offering. And this we keep very, very, very up to date. So anytime you go to our website, you should have always the most accurate and current information. Let's see what other questions we got. So Monet, I'm not sure which portal you're referring to. But if you see one of our flyers, feel free to change it to put your information on it so that you can use it. Wes is asking, what's our minimum property price? Interesting question. So for this one, we don't have a minimum property price. We have a minimum loan amount. So what that means is, if I'm buying a property, even if I'm buying it for $25,000, but my rehab budget, let's say, is going to be $100,000, and it makes the deal make sense, well, my loan amount is above that 75, so I'm good. So between the purchase and the renovation, your loan amount has to be above 75,000. We got some good questions, guys. If we have any more, I would love to hear them and see how I can help you out. Feel free also to connect. My name is Max Chera with Express Capital Financing. I'm one of the owners here. We're a family-based company. It's myself, my father, my brother. You have my direct line right there. You can also reach out to our office at 718-286-0806 or email us at info@expresscapitalfinancing.com. Let's see, what states do you offer programs in? We lend in all 50 states. All 50 states. I think I saw one more. How do you determine experience? What is needed? Also, if I'm a member of an LLC but want to do a flip myself, can I count the deal that I did under my LLC as my experience? Amazing question, Alex. I'm so happy you brought this up because this is something I feel like can bring a lot of value to you guys. If you are involved in a deal, I would highly recommend that above percentage, you negotiate first to get your name on the operating agreement. So the answer to your second question is yes. If you are on an LLC, can you count that as experience? The answer is yes. How do we verify experience? How do we look at experience? We generally are going to send you a simple spreadsheet. You'll put in the address, how much you bought it for, when you bought it, what you renovated, and how much you renovated it, and what your sales price was. Now, you could also use rental properties as experience that you've done renovations to, right? So we are just looking to make sure that you held title. We're going to go online, see 123 Main Street LLC is the owner. Great. Alex is the owner of 123 Main Street. Great. He's there, right? So that's how we look at experience. That's how we make sure about it. Now, if you want to go a little bit deeper into it, which I'd be happy to, experience also counts on the sense of, hey, I've done a $500,000 renovation, and now my next deal is 100. Well, yeah, you can get that done. That seems like a simple deal for you. But now let's talk the opposite. Let's say someone who's brand new, all of a sudden now has a deal for more experience than they can handle. We might bring that up to them, right? So that's where it's a kind of a mixture, and it makes sense. We want to understand your deal, and what has to happen. What have you done before? I'm probably stressing it a little bit more than I should. It's really, we don't go that deep into it as far as that's concerned. But again, experience is the biggest part of everything. If you have a lot of experience, you're going to get the best leverages. If you've done something multiple times and succeeded, we see that, and we trust that. Any other questions for you guys?
Can you hear me, Max?
I hear you, Victor.
Oh, great. Come on, guys, bring the questions in.
Let's see, we got, I think, 2 more. Are there any license requirements for any specific states? There are. Some states such as Arizona, Nevada, they have some licensing requirements. But if you're looking to broker deals, you can do it with us in any city, any state, because we're licensed in those. So just reach out to us and we can kind of go further into that. Do you moderate on Clubhouse? I'm on Clubhouse. Honestly, I've not gotten too deep into it, but would love to connect with you there, Wes. So I'll share with you my info, and I'll get more involved with it. I've been meaning to. Victor, have you played with Clubhouse yet?
I'm sorry?
Have you played with Clubhouse yet?
No.
Gotcha.
Yeah, Richard.
Yeah, Richard's doing the smart thing right now. He's networking and letting everybody know that he does insurance, guys. If you need insurance on vacant properties, get in touch with him. And he's also in Fishkill.
Any questions?
We got one more. What type of lead vendors would you recommend? What kind of to get leads? Ooh. Happy you asked this. So if you go here under business research, so Monet's question is, where can I go to get leads? Right? It sounds like she wants to get in touch with more sellers and have more conversations. That's going to lead to more deals. So if you go to business resources and affiliate partners, you'll get in touch here. You'll see a lot of different vendors. So you'll have here real estate mentorship and coaching programs. You'll have Roofstock, which is pretty much a one-place shop where you can find investment properties, and that's kind of what they focus on. Real Estate IQ, this is where you're going to get your leads from. They provide you with foreclosure leads, divorce leads, any type of list that you could think of that you would want that investors ask for, they have. They actually just started a big push. I think they're going, either they went nationwide or they went East Coast wide a couple of months ago. And that was a really big move. They're originally a Texas company. We do a lot of education with them, and we recommend them a lot. I've actually used their leads before as well. And who else is here? And then if you need more information or you want to get in touch with more people, give us a call. We connect with all of our borrowers and our partners, as we call it. We want to make sure that you're successful, so we're going to put you in touch with the people you need to in order to make sure of that. Any other last minute yes, we got Mohammed. I am a new investor in fix and flip, and I recently borrowed. Mohammed, do you want to finish the question? Let's see if we have any more. Christina asked if we lend in Florida. Yes, we lend in Florida. We lend in all 50 states. Our biggest states are obviously the East Coast. They're our backyards. Florida is a huge place. We do a lot of business. Texas, California, Ohio, the Carolina, the whole East Coast from top to bottom. I'm not going to go through them because they're all really hot right now. Where else is hot? Georgia is really hot right now. A lot of good markets. Alabama, we lend in is yes, Alabama. Honestly, that was one that took me by surprise. I've been seeing deals now coming out of Mobile, Alabama, left and right. Actually, we do lend there, and that is also a big place where we're seeing a lot of deal flow come from. Okay, so Mohammed borrowed from another hard money lender for fix and flip. Anytime I need PLF letter, I can just go to their website and print a PLF letter. What is your process? Do I have to call each time I need a PLF or what? I would be a little bit, I honestly, I don't know what that process looks like, Mohammed. With us, I don't have the ability for you to print it from our website, but I am your printer. So you would pretty much, once you get pre-approved, you could reach out to me as often as you like, and I will get you pre-approvals. I don't like to do one standard pre-approval letter, because if I give you a letter that says 300,000, 400,000, you go into a $100,000 property and that seller decides to get greedy that Monday, guess what? You're going to have to negotiate a lot harder than you would beforehand. So I like to give them out for each deal. I'll give you a generic one should you need, like, for emergency, obviously, but I would recommend that you reach out to me for each deal, and I would prepare you a personalized letter. And then under LLC, yes, Christina, all of our loans are funded through an LLC. Our minimum loan amounts are $75,000 for commercial mortgages. We could go a little bit lower. And let's see. First off, thank you so much, Leslie. It's been a pleasure, and I would definitely looking forward to you reaching out. Key West Airbnb is very big, by the way, Victor. I'm very happy you mentioned that. One little tidbit that I'm going to give you guys of advice is that a lot of us non-QM lenders, non-QM is the secondary mortgages, which means it's just not conventional, which means that we're just not conforming to Fannie Mae, Freddie Mac, and all those guys. We're just kind of coming up with something private, right? So when you're funding an Airbnb deal, a property you want to use for Airbnb, it's not currently, finance it as a regular residential property, because you're going to use the vacant property. Lenders like myself will use the vacant rents, and then you use it as Airbnb afterwards. You're allowed, it's residential. As long as you're staying residential, you're allowed to. So we do a lot of Airbnbs. We do both. We do for properties that are being used as Airbnbs, and we do for properties that are not currently, but will be. So we can help guide you in the right direction as far as those are concerned as well. We have a program for residential in the event the borrower cannot get a mortgage quality. Unfortunately, no, Monet. That's the one thing that we do not lend on, is for a primary residence. That is the only thing that we do not lend on, primary residence. Well, I appreciate you guys having me. Victor, thank you so much for this opportunity. It's always a pleasure to be here with the Fishkill group. You guys always have some of the best questions. And if there's no other further questions, I just want to say thank you to everybody, and hope everyone enjoyed tonight's webinar.
We're just going to add that April 5th, we're going to have the construction condo conversion loans, and we hope to see Max and Marty back here again. All of you, thanks for coming this evening. It's great seeing you.
Appreciate it, Vic.
All right, buddy.
You
Take
too.
care.
All the best, guys. Enjoy your night.